The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks, so come on back here to the Diagnostic Trading Hour right here on Friday. Hope you're having a great Friday. Had a great show over this morning. Bull Bear Binary Hour. Had a nice little oil trade. Hopped in and took profit on that. And I may go over that one again with you just in case you missed it, because I talked a lot about how markets move and how to be one step ahead of the markets, which is the heart of diagnostic trading. We got the S&P right now is up 13.5 points. We got the Russell up 16.2. The NASDAQ is up 38. Looking on over at the Dow. The Dow is currently up 61 points on the day. Check it out, copper. Copper's down 1%, about where it was at this morning. Got silver pulled back a little bit, but down 1% still. Gold moving down right now, 0.71% on the day. And let me see here what else we got. But yeah, just sort of flying on us. But okay, so yeah, we got gold sitting right now 1307.6. So just oscillating right there. We'll do a little in-depth analysis. Check that one out. We got silver, like I said, down 1%. Natural gas heading on over into our energy sector here. Pretty quiet today. Very quiet day for silver. Only a 0.3% move. We got oil also down the same amount, down 31 cents on the day. Had a lot of movement yesterday, burned out a lot of orders. I'm sure a lot of stops got hit along the way, but still been a great trade. Been some awesome, very predictable moves in oil, and I want to cover those with you. Checking out the ags. Ags right now down 1.5% on corn, about 6 points right there, but also 6 points on soybeans, down 0.5%. Let's check out our currency pairs. We got the pound dollar is currently down 26 pips. We got the euro dollar down 6. We got the euro pound is up 11. Check out the dollar CAD. Dollar CAD right now is down 32 pips on the day, with the dollar franc up 13. Dollar yen's up 18. Pound yen up 8. Euro yen up 17. And the Aussie yen is up 49 pips on the day. All right, so going back on over here to oil. And that's gold right now. We'll come back to gold. We may hop over to oil. But let's do, I guess gold's about to close here in 20 minutes. Let's go ahead and check it out and see if there's anything we can pick up off this. Been lots of volume spikes happening, at least on the 5 minutes, over and over and over again. And let me see. Let me go over to my drawing tools, put this thing into stay in draw mode, and I can pop these up on here for you. All right, so we had a short volume spike right over here on the 15 minutes. So 1, 2, 3, and short. Trade expired profitable. In the morning, we had a 5-minute spike right there. Let me grab that one. So right there. Now, that would have been an aggressive entry because it did not break below the low. Still, regardless of that, profitable. Going on over to 5 minutes. We're right there at the end of the hour. Don't go into the next hour, which you're doing out of the money. Did not break the high. And again, I'm not usually big on those end of the money one, end of the hour ones. But it would have been going in the next hour, and I would have had to do it out of the money. If I would have done it out of the money, I would have had to do an aggressive entry. So you got out of the money, top of hour, aggressive entry, not the best combination. If you would have done it, trade would not have been profitable. So you see why I don't like those ones at the top of the hour. There's just too much possible movement left in the hour to really depend on it working for you. But regardless, looking on over here, we got a long 5 minute. That one worked out beautifully right there, middle of the hour, and went on up. And going ahead, check it out. We had a short volume spike, broke down. Great conservative entry across the boards here. Lots of these today. So hopefully you're taking advantage of some of this. And then going over the 5 minute again, end of hour. So not my biggest favorite one there. It did work on an aggressive and a conservative entry, both, but it would have made you really nervous because it popped on right down there. All right, so goes on over. Oh, got to change that color. Got a down arrow. That was a long trade. And moved on up. And let me scroll on over. We're into this one now. We got a end of hour It is a short, again, this is an end-of-hour entry, right? So I don't like those. And let's see here. What do we got? We got a, which is good because I actually have a short position I'm looking at on gold. But so that would have given you a conservative and aggressive both entry right there to go short. But again, top of hour, not my favorites. And hopefully I'll be right that will not be a good signal because I don't like those at the end of the hour and because I want it to go up. But we'll see how it ends up. Right now we're sitting at 1307.7. If we go back and we can do a little more in-depth analysis and go, okay, let's check out what's been happening. Well, yesterday we had that meteoric rise with all the bad news that came out. And we said make sure you send out your prayers for those people and their families. And just, everything that's going on right now. But looking at this, the market's flying down, goes on down here, hits 0.5, 0.7, and we actually, looks like we did touch, what do we get right here? We actually went to 95% of high to low deviation, because it actually starts, even though where I have the line on here, it actually starts at 1:30 the previous day, because that's when the settlement is on gold. And so we actually did move on down there and had a little bit of a move up and then a move down. So we got our one deviation move pretty much almost to the tick, 95% of a deviation move before it stopped and bounced off of that. So that does give us a clue, especially on Friday. Things are probably done as far as a massive down move, any lower than that, or much lower than that at least. And let's see, what else do we have over here? Let's go back. Let's see if we have some magnets or anything that we can check out. On the 10-minute bars, we did get a pretty high 5,000. Let's plot right there and put that one on up. Now that we got that done, let's back up and see, does that line up with what we'd want to call a magnet price, or is that just low? Looks like to me that's probably pretty low. So check that out right there, okay? So pretty low compared to your average magnet. So not necessarily a really strong magnet. That's good for us because not really, sort of shooting for that. We can go up to the next level. It would be about 7,500. And let's see here. And it looks like pretty consistently you might be able to get one more. So you got a 5,000, a little weaker magnet level. You got a 7,500. That looks like that's pretty consistent. And then I may actually jump it up. I'm going to look at jumping that thing all the way up to right around 15,000. And let's scroll back. Let's see if we got, see 15,000 spikes right up to it, give or take a little percent there. Another spike right up there, so stronger magnet levels. So now once I know what those volume spikes are, now I'm able to go in, and I like putting them on the parallel lines there. I've been getting in one of my traders, Steven, that I work with a lot, and he's been awesome, but he's like, hey, start using the ray lines. So I'm going to check those out on these where these spikes happen. And I don't know how that one got moved down, but we need to move that back up there. Okay, so we got the swivel right here. That's obviously a magnet, or that's a miniature magnet, I guess you could say. Right over here. And let me see, which one is it? Any, mini, miny, mo. All right, so right here. We have that one, or let's see which one is it. We got line, ray. Is the ray going to work? There we go. Okay, so we got this ray down here. We can color that different colors. Like I'll usually go in and I'll label them. So let's make it at least a different color. Okay, and I don't really care what you use, just as long as you know what it means. All right, so we got that lower level. Let's see if we got any levels above that. So that's where going back and forth helps out. But anyway, so 1305. Now I have to remember going backwards as I'm setting it up. Let's go over here. All right, so here I would classify this level right here. Obviously, it's our higher level, it's our 15,000 level. So as a magnet there, and so let's extend that one over, and that gives us up to about 1319. That's where the market's going to be shooting back to after it falls on back down. Let's see what we got maybe in between these levels. We got another sort of a medium magnet level above that as well. So we can also plot right on up here at 1325. Get the right one. And so right over here, 1325, which is right at that 1.5 deviation move for the day on that. Put that one in. I think I'm angling my ray. Let's see here. Come on. There we go. A little bit lower. Got to learn how to. I'm not the architect. There we go. That's close enough. Okay. Another reason I like horizontal lines. Okay, so we're going on over. That gives us a couple up areas, and we know that we have the 1305 down here as well. Just got to remember that. And we'll see what we have in between. All right, if we go on back here, going further down, got a big one right there. We'll go ahead and chart that one out. And this would obviously be a lower level. So if it does decide to break to the up or down side, and we'll go ahead and change that color. Okay, and now let's get it just angle, isn't it? Let's see here. Come on, let's bring her down. Okay, and we go up here. There's another level. It's about 1301. We can extend that one out. All right, and so we'll go in and grab that one. Update its color. I thought I made it red, but I guess I'll try again. Okay, so crimson will work, whatever. All right, so and I'm working on getting an indicator made with my programming team to try to get this simplified a little bit so we can automate the entire process. It'll make it a lot easier to do. But having to manually go and do all the research. But it's healthy learning how to do it. Everything I do, of course, first I do it manually for quite a while. I got to figure out the logic. Once I figure out the logic, then I got to work with programmers, put that together. And now that we got that, now let's go ahead and zoom on back in on the current day. Let's get a little closer look at what's been happening. And so that shows us we basically have two targets. Target right above settlement there, or right on down to pretty much the low of the day, which is a 1 deviation move low. Obviously, we only have 10 minutes left in the day. We're not hitting either one of those levels today. And the magnets themselves will serve as mini magnets. But it's really important that I think going into Sunday, Monday, looking and targeting those levels, knowing, hey, where is gold most likely going to move to by Monday? It's probably going to be either 1305 or it will move to 1318.7. And there's a variety of different methods you can use. You can use the deviation method for directional trading. The 10-minute deviation method I covered last week on the archives there. If you haven't watched them, check out Channel 7 on TFNN under Tiger TV, and you can check out how I taught the deviation method. But we'll do a little more analysis when we get back on this right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, we're back here to the Diagnostic Trading Hour. We're checking out gold. We're going over the 2 points you want to be aware of, basically 1318.5. and 1305, actually, to get right on target. Be 1305. So 1318.5 and 1305, those are 2 magnet levels. We expect to hit one of those 2 levels next week on Monday is what I'd be shooting for, okay? Now we can go even further down, show you the next couple levels from there. Be looking for a move on down to 1293. And a move up to about 1326. So it'd be, if it can break through those levels, I guess we have a 1300 in between there too. So 1305, 1300, 1293. These are magnet levels. They're levels based on high volume areas. And it should have to usually break through those areas with pretty significant volume in order to keep going. Otherwise, it'll just land on it and come back to it over and over and over again. Let's look at, and it'll actually serve you even later as support and resistance levels, such as we set this magnet level right here, it comes up, right back to it, bounces off of it, okay? Then the market does this massive drawdown, okay? So we'll look at to go back on up there. We have this magnet level. Look what happens. It hits this magnet level, comes back to the magnet. After it establishes this magnet, this is the old magnet, comes back to it and just hangs out and gets drawn right back up to this magnet again. And then what happens? It comes down and just hangs out for a little bit until it finally is able to push on down. If I go back, I guarantee I can find another magnet in here. But comes down, establishes a new magnet. But for it to get through that, to establish a new magnet, you usually have to have some decent volume. And so once you got it, though, then now you have a new range that you can use. And you can use these levels to help you in your trading. Now, if that's broken through with significant volume, okay, only if it's broken through with significant volume will I go through it and I'll change the color. Okay, so that way I'm trying to keep track of what's What's a magnet that hasn't been breached? Like this magnet up here has not been breached since it was formed. Okay? This one hasn't been breached since it was formed. Now it's a little bit lower level on the totem pole, so you could use like dotted lines or something, like a 5,000 level. And I probably need to do a whole seminar on this, but just putting the different pieces together. And, so go through and basically, have, different ratings of your magnet levels, like a, tier 1, tier 2, tier 3. This is not as strong. I don't think it's going to be as hard for it to push through and break through this whenever we roll in the next week. I think it'll pretty quickly punch through it. If it does decide to go down, we'll hit 1,300. And we can go back and we look at that 1,300 level. We'll see how strong is that level. So keep going back. And eventually, we'll run into it. There we go. And that was a 25,000, about a 20,000 contract level. That's a very high volume level there. Maybe not that much. Let me double check. We got 15. Okay, 15, which is what we were talking about being a top level. So 15,000 level. That's going to be a strong level. We go down here. And this one was pretty massive. This one was a 20,000. That's going to be a very strong level. So it's going to have to punch through this with some volume in order to run on down here. To really bust out of it, but we can angle that a little bit, I guess. Let's see here. These stupid rays. They need a horizontal ray. That's what I need. Do I have that? Horizontal line, arrow line, extended line, ray. Okay, there's a new indicator for my list. Horizontal ray. Because if I can choose horizontal line, then I know my number is accurate. And that can add up to a big deal. So I'm going to get rid of that one right there. Get rid of the other one. Let me redo that for you, because I'm trying to get used to these rays, but I'm not keeping them steady. And we'll do another one right down here. Okay. And then just to make sure these are in line, I'll just redo all of them. We'll do one there, do another one right there, and that'll allow us to get rid of these. But I wonder if I can get that done pretty easy. Okay, so now that we have all those levels, let me go with you one more time. All right, so we still got 1325 on the high side, and then the level before that, we're actually looking at 1318. Okay, so basically 1318, then 1325 will be the next point to go to. These are all high volume levels. Going on down, we have a sort of a low level right now where we're sitting at 1304. And if it does decide to break down through there, it's going to have to punch through pretty hard through 1302. So it's a little bit higher than I told you before. 1302 and on down to 1292. Really going to be our 1292.5. That's going to be our next level to go through. So if it punches through here, this is exactly where we're expected to get to. And I would expect it'll get at least to 1325 or to 1293, 1292 right there on Monday. So if you're directional, you know what to target. Stay right there. I'll be right back after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And right now, looking at gold, now you see why I do not like spikes at the end of an hour. Usually they don't work out, which means I haven't tested this yet. But one of the things I learned a long time ago was when something is not working, and it's consistently not working, and you have defined risk on it, something like this, okay, then often the opposite will work. So I haven't tested it yet, but theory is, one, I don't like them at the end of the hour because they seem to lose a lot more often than not. In the hour, seem to work out great. So my theory that I want to test out is, what if I just did the opposite on the end of the hour ones only? So I'll be checking that out and seeing if there is a good way to confirm that. If there is, then I may have another strategy for myself. I'm always trying to add different plays to the playbook and do, I'm not trying to, I talked about trading personalities before on the show. I've done some webinars recently on it. And one of the things I talk about is there's, one personality type, like I call them, like a cheetah, like they have short sprints, and then they're always hopping from one thing to another, and they're tinkering, and they usually break it, and by the time they break it, then they stop trading, and they go into demo mode forever, and then they're forever tinkering traders that are always demo trading for life. And they change something every time it loses. Whereas they basically become they go from being a cheetah, which is usually a pretty decent trader with good analysis skills. A lot of times they'll be engineers, etc. But that's their strength and their weakness, because those analysis skills end up turning into over-optimization and it just gets way too complex. But the line, however, they will still change their model, but they're slow. Like, once they've established it, they're very slow to change it. They change it from a perspective of, hey, it's working good. What can I do to make it great? Okay? And so, like, Spike Tracker, right? Very simple system I use. It works good. What can I do to make it great? And to make it great, well, maybe I could test out and see if on the end of the hours, I just don't do them right now. Right now, I literally just don't take the trades at the end of the hour. But maybe I can make it even better by, instead of just throwing those trades out the window, maybe I can do the opposite of them and pick up additional profitable trades instead of just losing out on the potential profit on those trades. So, be careful whenever are you optimizing the system because it's losing, or are you taking a good system and then, or maybe you don't have a good system, but hopefully if you have a good system, you really want, if you're constantly tinkering forever with a losing system, you need to start from scratch. It's not 5 more indicators that are going to fix the thing. It's not praying, and it's not pounding on the top of your computer. Sometimes you just need to back up and go, why does this work? And I can tell you why. Every system I use, there's a reason why it works. It's not because it does, and it's not because it works because when these two lines cross, this is what happens. But it's based on market theory, not just, that's a cool idea. I just saw a video on that. I'm going to add that on top of my chart and see what happens. So I use price action, I use volume, and I use expected movement. Those are the 3 fundamentals, the 3 core pillars of, you could say, my trading philosophy whenever I'm doing trading. And you can look at this, and you see a big, like, there's my expected movement right there. Okay, so we just moved up. We have the expected movement on the hour. That's really all I would expect. Now, if it does break out on exceeding volume, depending upon what kind of trade I'm doing, depending on what market's open, what the hours are. Let's just say the market is still open on gold. I mean, you got the Globex, but you don't have the pit. But let's just say you were trading. Then, I mean, if it would break out of that with exceeding volume and keep going up and breaking a bar's high, then I would consider it. Right now, we're just sitting at it. And I would expect if anything, it's going to stay flat or pull on back down. And we've seen, there's a high to low again. Almost every single hour, we're just nailing it spot on how far we expect the market to move each and every hour. And that lets me know, hey, don't add on to shorts down here, Look to take profits on positions. Depending upon what kind of, position. If you're doing a bigger position, we wouldn't get too worried about it. But if you're trading directionally for the day for trends, you know what? You may want to wait until that new hour before you go back in and add into that short position. So, and if we're down a deviation, which we were right here, this is where we hit a 1 deviation move or 95% of a deviation move, you're done. Tighten your stop, call it a day, put a fork in it, and move on. Don't keep adding on to that position. Now, that doesn't mean there's not other trades, but don't be looking for short trades. You may get some nice long trades, depending on how smooth and strong that downtrend was. You might get a trend reversal. And I call that a MVP reversal, or a momentum volatility predictor reversal. And that's where the trend is very apparent. It's going down, it's solid, it's smooth, and then the market shows reverse. Not the market's going sideways. The market's going sideways, and I hit a deviation move, I probably expect the market to continue to go sideways. Now, I may get a little, there's not a few points of movement, but I don't expect some big, 10-point trend on it. I expect that to happen after a big trend. Then I get a reversal move, deviation level especially, let's go for it. Add a spike striker in there on top of that to confirm it. That's a lot of stuff in your favor. So the more of those little bitty pieces you can put together to help you out, then the better you can get at being a step ahead. So reading volume is one of those, how to get a step ahead. Understanding magnet pricing is understanding reading volume, understanding volume spikes, understanding expectations. To give you a couple other examples, let's see if I can, I'll switch over to oil. We'll talk about that because I was on that subject this morning. We were looking at oil, and it was awesome. We were just calling it. It's like, boom, going to turn here, going to turn here, going to turn here, going to turn here. How did I know in advance where it was going to turn? Well, I didn't know, but how did I have the ability to actually project that at all as any kind of possibility? And it's, in essence, it's learning to think like most traders think, okay? And then figure out how to profit from that. Well, the good thing is you're like most traders, like it or not, okay? At least your natural instinct, okay? So you go, you know what? If I would have bought, and this is what I was teaching this morning, and we were down at 1 deviation level on top of that, so of course you expect the market to go up, all that fun stuff. But here's what I do. Okay, if I went short, if I would have caught this, where would my stop be? Well, it'd probably be up here, okay? Right above the high. And, just looking at all these different methods. And then all of a sudden the market sort of goes into a little chop, oscillation, and then, the market starts turning around. And this is sort of where we picked up on the bull-bear binary hour this morning. So, okay, the market came back down and basically double-bottomed over here at the 1 deviation level. And market goes up. So if you're buying, either in this bar off the bounce, maybe you're a swing trader, maybe you see some momentum, the bar breaks out of the previous bar's high, you get into this trade right here. And it comes on up. By the way, it's at settlement. Most traders aren't even aware where settlement is on their chart. They have no idea. But it's up at settlement. And, it starts oscillating on me. Where would I, as an average trader, take everything off the chart that I have. As an average trader, where would I probably put my stop? Probably since, this happens and then this happens, well, there's no other lows besides this bar right here. Okay, so once it pulls back a little bit, I'm a little bit nervous. Then it breaks that low. Well, there's nowhere else to put I can trail it up and get out, but there's nowhere else really to put my stop except for right below the low of this price, 102.82. So we get in here, we take a short, okay? And what we're doing is we're targeting on this trade for it to come back down and hit at least 102.82, probably actually 102.81, because a lot of traders will put their stop like this, a tick below, right? So we get in there, we go short on the trade. It oscillates a little bit on us, but we used a binary, which is really nice, so we're not flipping out. We use an out-of-the-money contract, so we don't even need to have a stop loss because our trade is our stop. Simple trend line right there. It lines up. It's going. Took a little longer. I had the trend line right over here, and then, had it moved out a little bit, and I'm like, come on, a little bit further. And then finally, we ended up pretty much right there with our trend line. But they got it like right there. So we got in, and this is actually where we took the profit on the trade, because I went in and I said, okay, it's going to go down there, and I want to say we had like the 102.80. I had to pull up my trade record. I want to say it was 102.80 strike. And if we go over and we look at this, and it got down to 102.81, remember I buy back at 57 in case it doesn't quite hit my strike to the tick. Okay, that's very on purpose. That's why I use 57 instead of 53 or 50. So, because I know I may be a few ticks off. And I want to give that, you got to give yourself a little bit of wiggle room. So, I've had trades that have just been pounding. I'm sure you've seen this if you've been on, trading on a DOM, and the market just pounds and pounds and pounds against your level, and it just won't go one more stinking tick so you can get filled. And then it does, but you're behind 800 other orders, because on futures it's first in, first fill. So you're behind all these other orders, and you're seeing them get filled, them get filled, they get filled, then it drops. As you start to learn where those levels are, you learn to start taking profits right before those levels, okay? So, if I had maybe a take profit over at 102.80, okay, and I would say I was short oil, like the oil future CL, and I'm like, okay, I think the stop's going to be at 102.81. There's going to be a bunch of orders there, and so what I'm going to do is I'm going to go short, because I know everybody who went long, that's where their stop loss is at. And if it's at 102.81, I want to probably get a little bit before that. I probably want to get 102.82, 102.83. Okay? Well, if I on a binary, if I buy back at 57, that's why I'm getting at 102.81, 82.83. I'm not waiting on 102.80. On a future, just put it a few ticks before those major levels. Get in the front of the line, because the market's going to push through to where the orders are located. The market wants to go to where the orders are. Don't be in the group of everybody else. You see a water fountain, and there's 20 people on this water fountain, and you got to bend down a little bit to get to the lower one. It's the kid one, right? And you have to bend over and get it, or you can get the big tall one for the adults, but there's 800 people in line. Which one do you want to go to? I'll go up there, and I'll bend over a little bit, and I'll give them a few of my ticks, and I'll take my profit. I'm not going to go in the long line where I see it go, and it never fills me and turns around. Okay? So it's just learning how to get a step ahead, figure out where the long line is, where the short line is. How do I get in this short line? And, don't have that herd mentality. Learn how to watch the herd, see where the herd's going, and then get out before they're getting in or getting out, okay? So I'm going short. They went long. They're going to be getting out of the trade here. I'm going to be getting out of the trade here, okay? And I want to get out a little bit before them because I know there's going to be a lot of orders right down here. And you actually do see, it's not as apparent, but you do see, at least comparatively to around it, there is quite a bit of volume that picks up right there. And that's a lot of take profits happening, okay? Or a lot of take profits for those of us that are a step ahead of the markets, and stop losses for those who are a step behind the markets. There really is no in between. You're either a step ahead or you're a step behind. You're not just there, okay? And if you're not thinking, how do other traders think? Where do they put their stops? Where do they stop placing trades? That's like a deviation move. If you're not thinking, how would I do it if I was the person that got in here, then what you're not doing is you're not being a step ahead. If I'm being a step ahead, I go in here and I'm like, boom, I take profit. And I wait to look for, some consistency. We'll get another little double bottom type move right here. And I get another long. Now the show's over, but got another long. Where's it going to go? Well, we're all the guys who went short up here, and they didn't take out their greedy, and they didn't, because traders are greedy. I'm greedy, you're greedy, we're all greedy, but it doesn't mean we can't have a plan to manage that, okay? We all, want to make. And it's like, I'm not greedy. Well, by nature, you'd love to have more, I'm not saying that, you're not going to be wise and, contain that. And so over here, 103.19, okay, that was the last high. Let's look back. That's also a magnet price. So that's pretty important. Anyway, and what does it do? It goes right back, pops that magnet, goes back up to this magnet level that I plotted up here at 103. That was from this morning. Early in the morning, right. Oh, this is actually the next stop level. So actually, it was a stop magnet. It wasn't a high volume magnet. But I put another stop magnet because I wanted to go, well, if it does break this stop loss, where do I think it's going to go to next? And I looked at, okay, where was the last big drop with some volume? And it was pretty early in the morning, a little bit after the opening hours there for, gold, but right at the opening hours for gold on the pit. And I'm like, okay, so probably right there at the high would be the next place that the stops could be. So guess what I want to do? I want to take profit before that level and right before that level. So, and also, that settlement. So, all these things start adding up. And so you go in, you take the trade, and just like we have that trade, you have another trade. Boom, breaks the high, get in, take profit right here before it finishes out. You don't need to get that last little percent. Don't be the person that's in the long line. Okay, get out, take your profit. If it moves back down, where's it going to go to? Okay, it's just a very repetitive process, okay? Well, you get in here, go long. Okay, this is a very familiar pattern. Remember this one right here? We have the exact same pattern right here. Let me help you out. Right there. Looks the exact same thing as right there. And what did we say? It was the low of that bar, the low of this bar. Where is it going to go? Go in here, we get a short. It's going to go to at least the low of that bar. Pop. Take your profit. Rinse and repeat. All right, we'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. So we're just going through just sort of the whole rinse and repeat idea, bouncing between the deviation levels, basically swing trading, just looking at where would stops be. So this trade, probably by the time you got ready to go long on it, it was a little bit too late on that, but it did hit our price before the end of the hour. Comes on back down. You got another chance to go long. That one you definitely could have done. I call it a P1 trade as well. You go long. Where is it going to go? This, if you master this, it's really going to help you be able to pick your binary strikes. Now, it helps you as just a futures trader. So vital, okay? Because you will have so much more confidence. You won't just be following a system. A system is your ABCs. And you got to get down. This is where I'm going to enter. This is where I'm going to do my stop loss. This is where maybe I'm going to take profit or trail my stop, okay? But that 1, 2, 3, ABCs is your system. Like, just teach me the ABCs. Well, you got to learn your 1, 2, 3s too. You got to learn a little math, okay? And if you learn some of that 1, 2, 3, you will have so much more insane confidence. I've done some of the trades on here. I probably should do more of them on the show. But where I literally say, like I did this morning, I'm like, here's where it's going to go. I told me my exact binary strike. Boom, hit it, nailed it, and we do it again and again and again. And I'm not saying it's going to work for you every time, but the cool thing is by doing this, it'll work a lot, and the payouts can be at least decent, and sometimes they're fantastic. So, we'll have trades where I'll put on, several $100s and make a few $1,000. and just doing simple stuff like this. It's not even that complex. We go over here and, break the high. It just bounced off. We got sort of that little double. It's like hit it again, double bottom again. Okay? Looking forward, going long. So we had a little double bottom. Now we sort of bounced up, almost a little triple bottom, a little double bottom in that section right there. And so it breaks the high. Where's it going to go? It's going to go right up here. It's going to break this high. I'm not saying it's going to go all the way back up here again. I'm going to say where the stop's going to be. They're going to be above this high where all these traders went short. And so you go in, and guess what? Right up there, just barely breaks that high and hits it. And guess what? Get to do it again. We go in, and okay, so we're going to back off the trade. Remember, where other people are hopping in or where they're taking their stop losses, that's where we're getting out. When they're looking to go long, we're looking to get it. And either they're going long, trying to look for a breakout, or they're buying back to close out a short position, to cover a short position. Okay? That's where we're looking to go short. So the buyers for the breakouts and the buyers for the buying back and closing their positions, that's where we're looking to sell. Okay, to get out of position, not to initiate. So I want to initiate on my own, apart from other traders. I want to get out right before all of them get in. So that's that accumulation distribution. You've read about that before, I'm sure. But it's that idea of getting in when it's quietly happening, but knowing exactly where you're targeting before it happens. So we go over here, and the market's going up, 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 and then, we're starting to get a breakdown. We're at the end of the hour, so I'm not going to try to pull off some, super maneuver, but we can go for 130, okay? And you get a short right there, and where are we going to target? Well, let's look at what happened over here. Well, we could have stops anywhere along the way. There could be one there. Oh, look at that bar, how it just hit that by, a tick and stopped. Could definitely have one there. Could have ones here. Here, we haven't really violated these areas at all yet. And we could have one here. I mean, you can take it all the way back down. Usually it gets a little bit tighter. So, but any of these areas along the way. So you basically go in, what can I find? If I find, maybe 102.80, that's probably not going to work. They're 1.5 wide, so that would put us at, 103 point, or not 103. We're on oil, 20 cents wide on that. So either 102.80 or 103. So you can go in, you got it slightly out of the money, but not that much time, $25 or so, and you'll be able to take this profit off in no time. And if you're targeting it, you can go for more. You don't have to wait on 43. We'll talk about how you can go for more next week, right here on the Diagnostic Trading Hour. Y'all have a great day, and we'll be back on Monday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.